Have you seen the stock market lately? It's, up and down. And with the way things are, many are looking to alternative investments to try and maximize returns. But do they belong in your portfolio if you're closing in on retirement? It's a good question. Joining us, Gary Mattson, Taylor Stewart, the part of the family at Mattson Financial Services. That's a firm that's been helping people retire successfully right here in West Michigan for decades. You can also catch them on their popular radio show called Money Mentors. Gary, Taylor, welcome back. Thanks for being here. Appreciate it.
Thanks for having us.
What does that term mean, alternative investment?
So it can mean a lot of things, really, but typically just anything outside of the typical equity or stock market, bond market. Could be things like real estate or commodities. Could be structured notes. There's a lot of different types of alternative investments out there.
Okay, is this something that we should be considering if we're near retirement?
Or even before retirement. The typical stocks and bond portfolio, the 60-40 thing that's been going on for years, has been, quote, the standard, and the standard fails a lot of times. In fact, if you go back 20 years to 2000, in the last 24 years, a third of the time, stocks and bonds go down together. And so the theory is that they're supposed to alternatively keep each other afloat.
Right.
Well, when they both go down, and that's all you have, you're kind of stuck there going like, either I'm going to take money from a lost position, or I'm not going to take money, or I'm going to use up my portfolio. Any of those three don't sound good to us.
No. So are the returns higher? I mean, that's the draw, right? Is to get more returns back. Are they higher for those types of investments?
Well, they can be, but really we need to look at the overall risk profile for that particular client as well.
Okay.
Anything that you invest in is going to have risk, right? So we need to measure that risk versus reward. And it may not have a higher return, but it may have a higher annualized yield or something to help, kind of combat some volatility in the markets or times of high inflationary periods to make sure that that client's still getting that yield off of their portfolio.
Mark Twain said almost 120 years ago, and a lot of investors feel the same way. I am more concerned on the return of my assets than the return on my assets. In other words, I don't want to lose number one, and then I want to make money. And so what alternative assets let us do is that it allows us to use them. And when stocks and bonds go down together, we can use those for income, or we can use them to buy back into the market, or we can reduce risk, which is always good.
Right.
So while there is the return factor there, which we want the average to be up there, we want the average to be what the client needs as far as the income flow. So having income without a loss position is the most important thing we can do.
I hesitate to even throw another wrench into this, but taxes have got to be involved in here too. When it comes to taxes on these types of investments versus your standard, is there a difference?
There can be, yeah. Some of them are going to be more, tax friendly to a client, when it comes to their overall income tax or, long-term versus short-term capital gains. It all just depends on the type of asset, for sure.
And I think the biggest thing, this is one, in my opinion, that retirees miss the most of, and that's tax deferred. They know tax deferred growing up and putting money in IRAs and all that, but when it comes to after-tax dollars, they don't know anything about tax deferred. And so we show that asset, one of the classes we use is tax deferred.
I love that you use the word classes and the things that you tell us, because honestly, if folks watching this are like me, they know about this much, about the stuff that you know this much about. So I know you have a great offer for those who may have something set aside for retirement. They're getting near it. Maybe they want to make sure they're in the best position. What's that offer?
Yeah, so for the first 5 callers, if they've saved $250,000 or more for retirement in their 401k, brokerage accounts, wherever that may be, give the office a call, sit down with one of the fiduciary advisors and see if those alternative investments are even right for you. That's the benefit of sitting with one of our fiduciary advisors in the office. Is we're going to put our best foot forward, make sure that whatever you get in is truly right for you, and maybe alternative investments is a part of that.
I love how you guys have all the options covered, and you use the word fiduciary, which is a key word, which means they're legally obligated to put your needs before theirs, and it's a pretty great offer. Thank you so much. Appreciate it. If you want more information for you at home to take advantage, there it is on your screen. There's a big 800 number from Mattson Financial. If you're in or near retirement, Gary, Taylor, the rest of the team, they want to sit down with you personally to customize an enhanced retirement plan just for you. A comprehensive plan that includes a look at your investments, even those alternative investments, your income sources, taxes, and so much more to help get you to and through that retirement you deserve. Reserve one of those spots right now. Call 1-800-536-8907. That's 1-800-536-8907.